Could it really be that confidence is killing your gains? Now, we hear it all the time in the stock market. Confidence is the key to success. Trading is much more mental than it is technical, and a lot of the mental comes down to confidence to take the trades, to know what to do, etc. And while we hear things like this, have we actually taken a second to step back and look and see if there's any data on things related to this or something like confidence and overconfidence? That's what I want to do in today's video so we can make better data-driven decisions ourselves in our own trading and investing worlds. So let's start things off with an example. Now, this example is someone who buys stocks and holds them, and someone who buys stocks and sells covered calls. Now, if you're not familiar with covered calls, we've got some videos on the channel if you want to look back and search through the videos. But if you are aware of options and trading options, you might be aware of like betting on the stock to go up, betting on the stock to go down. And covered calls are technically a way to bet on the stock going down, but you own the stock. So you want it to go up, but you don't want it to go up too much. And if it doesn't go up too much, you can cash flow the covered call, meaning like you sell the option, you sell the covered call, and then if the stock never gets to that strike price, you just sold and made money and don't have to buy it back, and the option expires worthless, and you keep the money that you sold the option for, in a nutshell. But the reason why I bring that example up first is because I think that is probably the best way for someone who is an investor to start getting more active in like trading, in the trading world, like as like dipping your toes before you dare get into trading options or trading futures, which I think is much more superior to options by themselves. But that's another whole story, and we've got videos on futures and all that stuff if you want to dive deeper into that. But the whole point is that when you become more active in your participation in the markets and in the investing in the trading world, you potentially can bring on more risk. And everyone says the more active you are, the higher the chance you're going to lose money. And there is data to support that. There's actually a study from over 20 years ago, I believe, that looked at investors using the Schwab platform. And they essentially found that the more active the investor, they substantially underperformed what the overall S&P did. And the average household investor who was semi-active and made moves versus just buying and holding did worse than what the overall S&P 500 did during that span that was looked at, which was in the 90s. Now, the 90s, there was actually a very strong market. So you would think, oh, you could almost buy anything back in the 90s and it would probably go up. And that was generally the case, which is why the overall or average market returns during the span of the study were like 17+%. However, the average household earned under 17% on average, and the really active households were in the 11% range. So substantially underperforming the overall market in a time when you could probably pick some individual stocks and substantially outperform the market if you just bought and hold on a couple key names. But there is a grain of salt to the study. This was back before a lot of the zero commission trading, craziness began, which I believe was back in 2019, 2018, 2019. Somewhere in that time frame was when a lot of the zero commission trading got like heavily pushed, and a lot of the brokers had to catch up. I think Webull was in there, then it was Robinhood, and then it was TD, or Robinhood was there first, and then Webull or whatever it was, then TD Ameritrade, and then all the other brokers followed suit. Shortly after, a couple of them were like, yo, we're going zero commissions. So this data was prior to that, so you can do the math. Like, okay, the more active you are, the more commissions, the more you're probably going to have negatives as it is anyway, which is certainly true. But the people who ran this study boiled this down to overconfidence and thinking that you could beat the S&P 500, thinking that the more active you are, the more moves you can make that would outperform. Now, check this out. I don't no one really looks at this very closely or talk. I feel like no one talks about this. Think about this. Not only were those people making less money than if they just bought the S&P and held it. If they bought individual stocks and held them, they probably would have done better. For example, like the big techs, Apple, and this is prior to the tech bubble, or I guess into the tech bubble. So if you bought any tech stocks back then, you could have crushed. But despite all that, I guess, was Apple even around? I don't know. Either way, Microsoft was around. There was tech stocks to buy. Either way, picture a situation where you do all this active trading and investing, and then you literally do not even outperform the S&P. All of that wasted time. How much time, if you're watching this video right now, how much time do you spend looking at your portfolio, actively trading or investing or doing something? And if you're not profitable, right? Now, we all looked and have, the dream is to be there. And, once you're there, you can really speed things up and then you can make a lot of money very, very fast. And you don't really have to rush that. I get it. And we talk about that here on the channel a lot. I understand. But picture all of that. People who are overconfident, who end up falling into this potential despair because they now look at their results and like, well, I actually underperformed the S&P and I spent 10 hours a week, I don't know, managing my portfolio. Let's just say, I don't know, maybe it's a number, 5 hours a week, even though 5 hours a week, but across multiple years, that stacks up. That's a lot of hours. You could have done a lot of other things. Work out, do something else, make more money doing a side hustle or, getting a second part-time job. As much as that might not sound very interesting than the allure to trading and investing, because you can sit behind your computer and just go boop, 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 and make money. I get it. But it caused you to miss out on gains, literally miss out on gains by spending more time doing something. You made and have less money and not much to show for it. That kind of sucks. But can confidence be a good thing for your trading and investing? Well, that actually may be the case, and there's data to suggest it. But before we get into that data, I do want to thank the sponsor of today's video, IronBeam.
Welcome to IronBeam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the IronBeam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. IronBeam brings the future into the present. Join now and augment your trading experience.
There was a study out of Taiwan, which I think is referenced, is one of the studies that you may have heard of before, and it's been referenced a bit more in the trading community over the years. And this study out of Taiwan essentially looked at a lot of trades. Now, it's actually pretty common in Taiwan. There's a lot of people who trade, and they're talking about hundreds of thousands of people that were looked at in this study. And like a lot of other studies, or like you can imagine, a very small percentage of those people were actually able to be profitable, a net of fees even smaller, et cetera. But there's more, I guess, nuance in the data, which I think is important and you may not have heard of or you may not have seen when referencing this study. Of the small amount who were profitable, experience and past profits are the biggest, or the two single most largest, most important factors in future success and profitability going forward. That means people who have been around for some time, who have experienced the markets and have shown they have been profitable in years past, they have the best chance of continued profitability and future success, which you would kind of think makes sense, right? You've been through a lot, you've learned, you've gotten better, you've improved, you've made some money. And now that you've made some money, I'm going to do the same things that I did when I made some money, and I'm just going to scale that up and make some more money. And that's hopefully like what a lot of people are, hoping to achieve and what we aspire to get to, because a lot of it comes down to the mental approach, not necessarily the technicals, at the end of the day, as we talked about a lot. So it just comes down to getting used to the larger numbers, getting used to those things and not falling into the spiral, which we've talked about in a prior video. They dove deeper and they found that traders who are willing to short have a higher chance of profitability and success, which is interesting. And also traders who concentrate. The traders who concentrated most in, a smaller group of stocks or assets, you could say, did the best. Now, this all relates to confidence, not only because at the end of the day, you got past results, you're willing to short. Like, there is something to be said for someone who is willing to short, because historically speaking, the market up and to the right, I guess this way, up and to the right. And if you are not willing to short, you're kind of putting yourself in a situation where you're only going to play with the trend, which is fine, but the market doesn't always go up. So you miss out on potential days whether we go down, or if you're a day trader, right, days we go down, or if you're a swing trader, you're missing out on potential opportunity for overvalued stocks to play the backside, which I guess there's many, many ways to trade. But interestingly enough, you have to have the confidence to short. And, there's the risk of short squeeze, etc. So there's some confidence issues that could be had. And a big reason why a lot of people do not short. They do not trade short. They only trade long. So how do we improve this confidence that can be a good thing, but also can be a bad thing? It's like selective confidence, which is really kind of a weird way to think about it, but it almost has to be the case. You don't want to be overconfident where you're trying to predict what's going to happen next, thinking you can beat the S&P from an investing perspective, but you also do want to be confident from a trading perspective and want to stick to your guns, stick to what you know best, stick to the markets that you have an edge in, and really hone in on longing, shorting, the ability to play both sides, not to have a bias where you have to trade long or you have to trade short. The ability to go both ways does require confidence. And I think that's what goes back to tracking, journaling your trades. If you do not do that, it's very difficult to ultimately have the confidence in a system, a strategy that you know will work. If you tracked hundreds, like myself, over 1,000 trades I've tracked in TradeZella, subtle plug, but also I use them all the time. If you track that, you now have the confidence to continue to execute your strategy, or the confidence to change your strategy, because you know that when I trade at 2 to 4 p.m. Eastern, I lose more often than not. So I'm going to not do that. And that's where I think you can build the good confidence in your own trading and investing. Hope that was helpful. I will leave a bunch of links below this video. The sponsor, Iron Beam, I'll leave a link to TradeZella where we track and journal all of our trades. And I'll also leave a link to the studies that I referenced in this video. They're somewhat long, but I'll leave a link to them if you want to dive deeper into them, because they are definitely worth your time. Thanks so much, and I'll see you in the next one. Peace.